Hello, everyone. So today we are back for another weekly recap, and it definitely has been another busy week. I feel like I say that every single time, but it happens every week essentially. So anyway, jumping right into it. So earlier this week, a judge, I believe in Texas, overturned the ruling that was previously passed that would allow medical bills to be deleted from credit reports. So this was finalized back in January of 2025. It was a ruling that was established by the Consumer Financial Protection Bureau. And so that was essentially going to remove $49 billion worth of medical debt from the credit reports of about 15 million Americans. And so the thought process behind that was, well, for many people, medical bills can be super crippling. And putting that aside, a lot of people are okay financially, but it's just the medical debt that's just keeping them from doing things like buying a house and getting ahead financially. And so the thought process was if you remove this hurdle, it would essentially help them improve their credit and be able to achieve some of their other financial goals. Well, the judge in Texas has officially overturned this ruling and it is no longer going to be in effect. No surprise there. The current administration is definitely overturning many rulings that were implemented by the prior administration. So, this is just one of many that we've already seen, and we'll probably see more of this in the future. Next, so there are major changes coming to TSA. So, one, they are going to remove the requirement of you having to take your shoes off, even in the regular security line. And they also plan to create separate security lines for families and military members. So this, of course, is great news. This requirement of taking off your shoes was put into effect back in 2006 after we had an incident. I forget at which airport, but there was a bomber who had built a bomb and it was in the sole of his shoes. And so after that incident, that is when it became mandatory to remove your shoes when going through TSA at any airport here in the US. So the only way to bypass that rule or requirement is to have TSA pre-check. So a TSA pre-check, you have to pay an application fee, fill out an application, and go through essentially a thorough background check. And so once you are approved for TSA pre-check, or if you apply for global entry, you automatically get TSA pre-check. So once you have either of those statuses, then you can go through the pre-check, well, go through the TSA pre-check line. And once you are in that security line, there's no need for you to remove your shoes. So when TSA implements this reversal, meaning you no longer have to remove your shoes, what does that do for TSA pre-check? Does it now make it worth applying for? I don't know. So that is definitely TBD at this point. Other major announcement is Uber and Lucid announced a partnership that where they're going to create or launch 20,000 self-driving robo taxis. And they also are partnering with a third company called Nuro. So essentially, Uber is investing $300 million into Lucid for this project. So the goal is to roll out these 20,000 robo taxis over the next 6 years. So Lucid, of course, will build the vehicles. Uber will have these vehicles on their platform, and Nuro is going to build or create the technology, well, the self-driving technology. So will be very interesting to see how that plays out. And I know for myself personally, I have seen a couple of TikTok videos of people who have taken rides in these robo taxis. Very interesting video to watch. I can't say I would have gotten in the car, but when it works properly, it does seem to be a cool experience. Now, this, of course, is just following the trend of AI and robots replacing people. And we could have a whole conversation on that, what it looks like. But what I will say, regardless of what you do for a living, AI is going to impact your job, how you do your job, and potentially if your job will even exist in the future. And so AI is kind of like another industrial revolution. The biggest difference, in my opinion, with AI, the changes are going to come a lot faster than we've seen ever before. So if you think about the industrial revolution, it took like decades for things to really change significantly. But now with AI, we already have great technology and systems. And so AI is just going to shorten the curve of things changing. And so if you are not someone who has been willing to adopt I get it. I know many of us have our reservations, but for many of us, you are already using AI and you might not even realize it. So it's one of those things, we can't beat them, join them kind of things. And so I think we all kind of have to take heed to that in our professional and personal lives, but also as investors, right? So that's where we talk about how do we take real time news and use that information to make investing decisions. And so we are seeing that AI is becoming more mainstream, is revolutionizing how companies do business, how we operate our day to day. And so, if these products and services are in high demand, that usually means revenue is going to be increased, right? The businesses are going to grow. So, it may behoove you to consider investing in the AI industry in some form or capacity. So, when you think about it, you can invest in AI directly by investing in companies that AI is the core of their business. Like that's what they do, they live, they breathe that. You could also invest in companies that support AI, right? So they support the technology, the tools, the infrastructure that is needed for these companies to build out their AI tools. So there's ways to invest in AI indirectly or directly, but regardless of what, you should consider investing in AI. Now, you don't have to, but all I'm saying is you kind of have to expand your horizon when it comes to investing, and you can't only invest in the tried and true things. So, something to think about. Um, what's next? Oh, yeah. So this happened today. So Trump signed another bill. I know he's busy. Um, this is a crypto bill called the Genius Act, which stands for Guiding and Establishing National Innovation for U.S. Stablecoins. So this is essentially a cryptocurrency bill, and the goal, I think, overall, is to establish the U.S. as a crypto leader and crypto powerhouse. So I don't believe there's been a bill passed like this anywhere in the world. And so something to be said for that. So there are some pros and cons, in my opinion, of this bill. So I'll go through a few highlights. So this act essentially outlines how the stablecoin industry will be regulated. Now, that of course in itself is already problematic, right? Because the whole idea behind crypto is that it is outside of the traditional currencies and regulations, right? It's its own like ecosystem outside of federal regulation and oversight, which is why it was created essentially, right? So there's issues with that. But some good things. It's supposed to establish consumer protections for investors who do purchase stablecoins. It also kind of talks about how coins can be used. I'm not really sure how I feel about that either. It also prohibits non-approved coins. So I'm not sure how I feel about that either, right? I think when it comes to crypto, it's supposed to be a free market. So if someone creates a coin, it should be able to be on the market to be bought and sold freely. So how do they decide what coins are approved versus not? And in case you don't know what stable coins are, I know I kind of jumped right into that. Stable coins are a form of crypto, but they're tied to something, whether it's a fiat currency like the US dollar or Japanese yen, or it's tied to a commodity like gold. So there's something backing the coin. So stable coins tend to be a lot more stable than crypto on its own is. And so that is why some investors do partake in purchasing stable coins. So in case you didn't know what that actually was. So very interesting bill. I know I have mixed feelings about it, but we won't go into that during today's conversation. So This was a very busy week in terms of earnings calls, so I'm going to just jump right into it. There were so many companies to pick from. I really didn't know how to narrow down my broader list, so I did my best. So, first up, we have American Express. So, I am going to share my screen. Let me just make sure I find the right. Yeah, okay, find the right document. Now, I'm hoping that I'm still broadcasting. I know last time we were here, my screen kind of went black, but you could still hear my audio. I still have no idea why that happened at all. So hopefully we don't have any issues. Fingers crossed. So let me find, yes, here we go. Let me just make sure it is streaming. It is. Fantastic. Okay, so today, July 11th, American Express did publish their Q2 results, and they were pretty good results. So if we look here, total revenue is up 9%. Net income is down 4%. So they were less profitable Q1 of this year than they were they were less profitable Q2 of this year versus Q2 of last year. But I will say they definitely had a very upbeat, feel good vibe on their earnings call today. So they are definitely relying on premium products and high net worth customers to drive their business forward for the rest of the year. And that essentially is their strategy to increase growth. So, of course, we all know not many, both Chase and American Express have announced major changes to their premium products. So Chase did announce changes to their Chase Sapphire Reserve, but they also launched a new product, which is the Chase Sapphire Reserve for Business. Now, I did do a full review of that credit card on my YouTube channel. So if you have not seen that video, go ahead and check it out. I will try to put the replay and I had to put a link to the video in the caption of this video. Let me just write a note to myself so I don't forget. Okay, I'm gonna post that link. So anyhow, so that was the major announcement that Chase made, and they really are looking, we'll talk about them in a second, but they are definitely looking to rely on premium products as well to increase business. But now American Express, they put out a press release that major changes were coming, but then just left it there. They didn't tell us what the changes were. So it's like, okay, we kind of got this press release with like nothing behind it. All they mentioned is they are making major changes to both the personal and business version of the Platinum card later on this fall. That was really it. So I'm going to assume the changes will be similar to the ones that Chase announced earlier. I think it was last month. So we'll see. I should have muted. Anyway, so we will see. Other big announcement, they are launching a credit card with Coinbase. Let me see if I can pull that up because that was super interesting to me. And that also is launching this fall. So let me go ahead and find that. So this is the new Coinbase One card that American Express is launching this fall. It is in partnership with Coinbase, the cryptocurrency platform. And so essentially it's going to offer up to 4% Bitcoin back, not cash back, but Bitcoin back on every purchase. Now, we don't really have much more information than that. There is a wait list that you can join if you are so interested. But yeah, so they definitely are diversifying their credit card portfolio. They are like Chase's looking to rely on premium customers and products to drive business forward, which makes sense in this current economic state that we are in right now. So before I shouldn't have did that. Hold on. I want to pull up their stock. I don't know, that moved really slow. I don't know why, but let's see. Let's take a peek here. And their ticker symbol is AXP, in case you were wondering. And it looks like Wall Street did not respond positively to their press release. So just to kind of show you what I mean by that. So the press release was earlier today, and the stock is down. There's a bit of a drop here, which is kind of interesting. So if I look at one day, what's the one day? It's down a couple of bucks. So the peak here is 319. It's down to 307. It's down a bit, but regardless, it's down, which is pretty interesting considering, oh, it's down 2%. So that's pretty interesting considering that the press release and the earnings call had a positive note to it. They didn't report anything too negative necessarily. They also increased their revenue guidance, right, which is just their full year forecast. And so for them, they feel good about the business for the second half of the year. They see things on an upswing. So the fact that Wall Street responded negatively, it lets me wonder, well, do they not believe them? Right? That's essentially what this is telling me, right? So usually how this goes, just to kind of give you some context, when a company does a press release, it's like them giving their report card of their financials. They're either doing financial update of the quarter that just passed or the full year that just ended. That's usually what is discussed on an earnings call. So normally they're talking about their results, how revenue grew or didn't grow, what they did to reduce expenses, and how they increased profitability, right? All these like major things, major metrics that people care about as investors. So they kind of talk about that piece by piece during the earnings call. Then at the end, you'll have some analysts that will ask various questions to whomever is hosting the call. And it's like a mini report card, right? And so usually, if the company has had great financial results and they have a positive outlook for the future, Wall Street usually responds positively. And what does that look like? The stock price will go up. So that's usually how that goes. And then the opposite holds true as well. When they kind of give their press release, if it's bad news, revenue is down, profitability is down, the future outlook doesn't look too hot, right? Wall Street will respond negatively. And so the stock price will look similar to this. So in the case of American Express, they had a decent Q2, right? Revenue was up. Net income is down 4%, but that's not horrible considering the state of the economy right now. And they also increased their revenue guidance for the full year. And they talked about how they plan to get there. So whenever you give an earnings call, you can't just make up stuff. You can't just say, oh, revenue will go up and just leave it there. You have to give context as to how are you driving the business forward? How are you turning things around? What major things you have in the pipeline as far as acquisitions, new products? You have to tell a story. That's really what earnings calls are. You're giving the results and you're selling a story to Wall Street. That's it. And so if you don't do a good job of selling the story, this is what happens. They don't believe you. So the stock price goes down. So that's how I interpret this. So we'll see how Q3 pans out. But right now, stock is down. Earnings call was kind of okay, but the analysts aren't buying it. So we'll see how that goes. Next up, we have Chase. So let me make sure I have the right document up. I do. Okay, I do. So let me go back and share my screen. So this is the press release from Chase's Q2 earnings. This document is hard to read. And as someone who works in finance, I like vomit whenever I look at this document. It's just not laid out very well. The colors are awful. And I know colors sound so superficial, but as someone who worked in finance, when you are creating presentations or any kind of document, the aesthetics matters, from the color to the font to the formatting. I know for the average person, you just look at it like whatever. Lots of thought is supposed to go into these things. So the fact that they have someone who put thought into this, and this is the best they could do. It just looks awful. But anyway, a little pet peeve of mine from my finance background. But anyway, I digress. So let's kind of look at the summary of their P&L. So just to kind of level set what we're looking at, this column here is their Q2 results. This column is their Q1 of this year results. And then this column here is Q2 of 2024. And then these four columns are like the variance analysis between the two. So this section here is comparing Q2 of this year's results to Q1 of this year's results. So it's a quarter over quarter comparison. And then this section here is a year over year comparison. So you're comparing Q2 of this year to Q2 of last year, just to kind of level set everyone so you know what we are in fact looking at. So you guys can see this. So anyway, so we are going to focus on the year over year review, which is going to be this column here. So revenue, we care about the net managed revenue. So I won't go into why, just keeping it simple. Revenue is down 10%. Net income is down 17%. So you already see that between Amex and Chase, the pictures look very different, right? Which is quite interesting. So Chase did announce in their earnings call and also in this press release that they too are relying on high net worth customers to drive their business forward as well. They also highlighted that they had over 500,000 new check. I think it's here somewhere. Yep, right here. They talk about that. Saw an increase of asset wealth management services, and that increased. Those fees increased by 10%, which of course converts to revenue, which helps their bottom line. And they also talked about how they refreshed the Sapphire Reserve, also launching the new reserve. Let me make this bigger so you guys can see. It's right here. And according to them, they have reactions to the changes that were made to the Sapphire Reserve. Also, the new reserve for business that is being offered. Now, what's ironic about this statement is if you look online, what people are sharing, no one's happy about the changes that were made to the Sapphire Reserve. So for them to say they have positive early reactions and strong new card acquisitions seems contradictory, I should say, to what we are seeing online. So I don't know which way to go with that, but it's interesting that that's what they put in their press release. So anyhow, they also announced they're increasing their dividends. I think that's here somewhere too. So this is listed right here. Stock dividend for the second time this year, which is pretty interesting considering that they weren't profitable in Q2. Now, when a company increases their dividends, that tends to signify that they have a healthy cash balance and that their business is very stable and is doing well. So even though Q2 didn't really pan out the best for Chase, I don't know what their Q1 results were, I don't recall, but based on their, full year forecast and full year guidance, they believe that position to increase dividends, which is a good thing. Now, Jamie Dimon, who is the CEO of Chase, obviously, mentioned that they have mixed feelings about what's going on right now, right? So there definitely are new regulations and guidelines that are beneficial for their business, but you do have, he has it right here. We do have outlook and tariff uncertainty, worsening geopolitical conditions, high fiscal deficits, right? All of these negative things kind of have them um, feeling reserved about what's going to happen for the rest of the year. So they are definitely preparing for the worst, but hoping for the best. And I think that's the, I guess, model that we're all trying to approach what's going on right now. So let's look at their stock price, because that, of course, is going to tell us a lot. So let me see if I can there. So their ticker symbol is JPM, in case you were wondering. And let's see. So definitely a different picture than American Express. So their stock price is up. If I look at it over the last day, it's up 0.5%. So it looks like Wall Street did respond positively to their earnings call. So it sounds like they believe Chase and what they have going on for the remainder of the year. Now, just for context, when a company discusses their Q2 earnings, that's usually their time to change their guidance, their full year guidance, right? So coming into the year, every company that's publicly traded kind of talks about their forecast for the year: revenue, expenses, profitability, and they'll give color around things that are going to happen this year. And then in Q1, they give their results and they kind of will just say, okay, it was good, it was bad, and they kind of just hold things steady. Once Q2 rolls around, they now have more data to help them understand what the second half of the year is going to look like. So this is when they will either hold their full year guidance or they'll make changes. They'll either increase it, meaning they're going to decrease their revenue outlook, they'll decrease their earnings per share. They're changing numbers, right? Or they'll do the opposite. They'll increase their guidance. They're going to increase their full year revenue forecast, increase profitability, all these things. So Q2 is a pretty big deal when it comes to financial reporting, in case you didn't know that. So next up, we are going to talk, just making sure I have the right, no, that's not the right one. Where? I have like this lag going on with my computer. I don't know what that's about. It's probably because I have like a gazillion tabs open. That'll do it. Okay, I have the right thing open. I just need to make it smaller. So I have like this large, like 36-inch monitor, but I disconnected from my MacBook when I go live. I find it just makes the experience better for all parties. So the screen was like this big and I had to make it smaller, but I have the right thing open. So let's see. Let's go ahead and see. So Netflix is definitely having a fantastic Q2 and year. So just for context, this is their Q2 results, obviously in the gray column, and we're going to compare year over year. So it's Q2 of 2024, which is here that I've highlighted, and of course Q2 of this year, which is the quarter they're reporting on that just ended. So revenue is up 16%. Net income, I know they don't have a percentage here, but net income is up 45% versus last year, which is crazy. So they, as I was just mentioning a little while ago, they have increased their full year guidance on both revenue and operating margins. So they are feeling very robust about their full year. Now, the increase in revenue currently and what they're projecting is based on a couple of things, right? So one, they've seen an increase in their membership. They also have increased prices, as we all know, right? So that naturally increases revenue. So increase in membership and price, that's just a win-win. And they also have seen an increase in ad sales, which makes sense. As a subscriber, it's annoying. I really hate those ads, but I refuse to pay for the ad-free version. Call me crazy. Um, so let's take a look at their stock. So nothing much more to report than that. They also are launching some new shows this year, either brand new series or bringing on old time series that they know that will do well. So they just, have a positive outlook for the rest of 2025, essentially, which is a far cry from where they were a year ago. So let's go ahead and take a peek. I think they're stuck. Their ticker symbol is NF. Yeah, LX. Yeah, there it is. So their stock price is at over $1,200 per share, which is crazy to say. I didn't think it was going to be that high. Can I make this a little smaller so I can do more on the screen? Yeah, there we go. Okay. Does that show on your end too, guys? Yeah, it does. Sweet. So I want to just look at the last. There was a time where their stock like tanked in 22, so about 3 years ago, and it's been on an upward swing ever since. That's bonkers. A little dip here. Wow. Okay. Anyway, and I digress. So if we look at the last day or so, okay, their stock is percent. That also tells me that. And now again, this is just my professional opinion on what you're looking at here, but what I kind of explained before, if they gave a positive Q2 earnings call and they have a future outlook that's positive, but the stock price is down, that's just my assumption that Wall Street doesn't believe them at all. But anyway, but needless to say, the stock is still doing well considering where they were just 3 years ago. They do not pay a dividend, which kind of makes sense, I guess. So yeah, pretty expensive stock still. I'm surprised. I don't know if they would do a stock split or not, though. If it would make sense for them to do that. I don't know. Anyway, and last but not least, we have United Airlines. Now, United Airlines, I think Delta had their earnings call last week, but I couldn't go live last week, so we didn't kind of cover that. But definitely want to cover United Airlines. So let's see what they are talking about. I thought I had their. I think it's in here somewhere, or is it not? Oh yeah, here it is. Duh. Okay, so they are showing their quarter over quarter. Well, yeah, quarter over quarter results here, and this is their first half comparison here. So we're going to focus on the quarterly comparison. So revenue is up approximately 2%. Net income is down 26%, and that is down here. Now, obviously, that's not the best thing to see. Revenue is not up by much. Profitability is down quite a bit. But they, of course, will put a positive spin to give investors confidence. I'm going to just scroll up to part of the call where they talked about, how they had a lot of on-time flights in Q2, which is interesting. I know out of Newark, things were a debacle in Q2 with flights being canceled, significant delays. But according to them, it's in here somewhere. Where is it? Oh, yeah. So it's consolidated on-time departures were the highest, and seat cancellation rates were the airline's lowest for a second quarter since the pandemic. And it says hubs Newark, LA, and San Fran all achieved their best on-time departure for a second quarter since the pandemic. That is super interesting because I know for a fact Newark was a mess in Q2. So I don't know. I don't know how to decipher that, but that's just me. Now, they did also contribute the slight increase in revenue due to increase in business travel, which to me makes sense, right? Now that we're kind of out of the pandemic, businesses are kind of back to normal. Also, a lot less remote work. So people do have to travel more for work now. So the increase in business travel definitely makes a lot of sense to me. So let's see what their stock today. Do. Sorry, I got a notification. I didn't know what that was. So their ticker symbol is UAL. In case you were curious. I've got way too many tabs open. Okay, waiting for this chart to load. All right, so if I look at their results, so their stock price is up slightly. So Wall Street did respond a bit positively to their earnings call. And I know for United, they also launched their new partnership with JetBlue that's going live later on this year. I forget what they're calling it, but it's going to be a partnership where you can be on the United Airlines website or app and book a JetBlue flight and vice versa. You also will be able to use your points. So if you have JetBlue points and you're looking to book a United Airlines flight, you can use your JetBlue points to book that flight and vice versa. Also, if you have status with either of the airline, some of those status benefits will transfer to the other airline. So it's definitely a partnership that makes sense because JetBlue is struggling. In case you guys didn't know, JetBlue, if they don't get acquired, I don't know how they're going to stay in business. Now, again, that's just my personal or professional opinion. Just to kind of show you guys what's going on with JetBlue. This is their stock performance over the last 5 years. The highest was about $20, $21. It's currently trading at $4.42. They have not been profitable for quite some time. So essentially for JetBlue, they have not been able to turn things around since the pandemic. Just to kind of keep things simple without going into too much detail, that's really what we're looking at. And so now they are fighting for their life, I would say, essentially, and trying to find creative ways to keep their business afloat. And that makes sense. So first they had their partnership with with American Airlines. We all saw that didn't play out too well. So now they have this new partnership with United Airlines. So we'll see, how that pans out. They also are doing other things, right? So they launched their new premium credit card. I want to say that was June. I did post a video about that. If you want to see that full review, check that out as well. So they launched their premium credit card. They also will be offering first class sections in some of their planes starting in 2026, I believe. They also will have their first lounge. When is that coming? Hold on. Let's take a peek. I forget. I do so many stories that sometimes I lose track of what is what. JetBlue. Nope, that's not what I want. Airport lounge. Yes. So they're opening their first lounge in New York here in JFK and Boston Logan. And that should be sometime at the end of 2025. So they have their premium credit cards. They're launching airport lounge access. They're adding first class to any planes that don't have Mint on them already. So yeah, they're definitely doing a lot to stay in business, and we'll see. I think I can't say that I believe that they'll turn things around. I don't know too much about the leadership at JetBlue the way I do like Delta. So I don't know enough about them to say they will be able to turn things around, but they're giving it a full faith effort. I will say that. For me, professionally, I think they will need to be acquired to stay in business. And I think this partnership with United Airlines is like a soft launch to that, right? So you have these integrations between the apps, right? You're doing services, meaning the status benefits will transfer from one airline to the other for the most part, not all benefits, but some. And so to me, that's like a soft launch to an eventual acquisition. Now, I could be 1,000% wrong. This is just my best guess. Now, will it happen next year? Probably not. It might be a few years in the making, but I think this partnership that they're launching at the second half of this year is the early stages to see, well, how would this look? What would this look like? How will it work? Is it a good business move or not? And so I think it might take a year or two before they can really see the results and if it makes sense or if it's worthwhile to make the acquisition. Again, my opinion, I could be wrong, but we'll see. So that is it for today's weekly recap. If you have any questions, feel free to put them in the comment section down below. I will go ahead and post a link to that review that I did about the Chase Reserve for Business. I'll put a link to the JetBlue video too, the JetBlue Premier Card. That is their premium credit card that they launched earlier this year. So in case you want to learn about that card and see that review, I will post that down below. So with that being said, have a great night, guys, and I'll talk to all of you soon. Take care.